To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Hello friends and welcome to the first chapter of SFM Financial Policy and Corporate Strategy. What is financial policy or what is corporate strategy? What is strategic financial management? Let us get to those in a bit. To understand this better, first let us take the example of the Tata Group. All of us are aware of the Tata Group, right? TATA, Mr. Ratan Tata, Mr. JRD Tata, Mr. Jamshedji Tata, right? So we are aware of the group broadly. If you are aware of how the corporate group of the entire Tata Group is structured, you have various companies like Tata Power, Tata Chemicals, Tata Telecommunications, then you have Tata Global Businesses, then you have TCS, which is their cash cow, or you have Tata Motors also, right? So all of these basically are companies forming part of the Tata Group. At the top, you have an entity called Tata Sons. Okay, Tata Sons is the holding entity, and these group companies also have cross holdings, by the way. Some of them are listed, some of them are unlisted, some of them are Indian incorporated, they have subsidiaries outside India. So it's a very complex structure, Tata Group. But the overall controlling entity is Tata Sons. Okay, and Tata Sons again controlling entities are some trusts of Tatas. So Tata family has some trusts, TRUSTS trusts. Basically these trusts have majority shareholding in Tata Sons, and Tata Sons basically has shareholding in these companies, and through this and bunch of cross shareholdings and all of that, Tata Sons controls the entire Tata Group. Fair enough? When you look at this, which is the most profitable company of the Tata Group? If you ask that question today, the answer is undoubtedly TCS, Tata Consultancy Services. If you ask that question probably 20 years ago, it would have been probably different, or probably not even 20, let's say 30 years ago or 40 years ago. It could probably have been, Telco or Tata Locomotive at what it was called Tata Motors, or it could have been something like Tata Power, or it could have been Tata Chemicals. But today, TCS is the primary or the crown jewel in the crown of Tata Sons or Tata Group, correct? They generate a lot of cash, and TCS is a listed company. So when TCS gives dividend, the dividend goes to all the shareholders and also Tata Sons, because Tata Sons is the holding company. When the dividend comes to Tata Sons, there may be some businesses which are not performing well. Probably Tata Power may require some money, Tata Telecommunications may require some money. So like that, various companies may require money. When they require money, they can raise from the markets, they can do a rights issue, they have other qualified institutional placement. There are a bunch of things that they can do. Tata Sons, by being the primary holding company, or by being the core company at the top, has authority and following the rule of law can actually invest in these companies, correct? Or Tata Sons can give dividend to the trusts which are shareholders in Tata Sons, and the trust can use that money for some charitable purpose or whatever it is. Okay, now you please sit in the position or shoes of Tata Sons. Who is the chairman of Tata Sons? Mr. N. Chandrasekaran, who was earlier the CEO of TCS. This man, when he was running TCS, his goal was to ensure TCS succeeds, whatever the success metrics were. Today, his goals probably are slightly different. What are his goals now, or what can we assume to be his goals? I don't know exactly what his goals are. Probably their corporate document or their board would be aware. But if you look at it today from a layman perspective or a student of finance perspective, his goals would be to ensure that all his businesses are profitable, all of them give good dividend. Some businesses which are bad, okay, they may have to be disposed of. Some businesses which are bad but can be turned around, he has to make investments. However, when he makes investments, he has only limited pool of money that he is getting from Tata Consultancy Services. So TCS is giving only so much dividend. He may have to raise some money from banks by pledging shares in Tata Sons, or by borrowing on the strength of the shares in subsidiary companies, something like that. Right? Take the resources, choose where he has to invest. Right? Choose where he has to invest, and then eventually ensure that all the businesses succeed, or whatever is failed, shut it down and be done with it, right? But what is his goal? Goal is continuously, for as long period as time as it is possible, most of his businesses should be making money. Profit maximization the goal of capitalism, right? Goal of capitalism is profit maximization. So even if you look at it from a Tata Sons perspective, their goal is profit maximization across various companies and sustainable profit maximization, sustainable wealth building, decisions to take investments or shut down some companies, run some companies, make some money in some companies, invest more money in some companies, choose amongst 3 or 4 companies. Let us say TCS gives 1000 crores dividend and they borrow another 500 crores. They have 1500 crores to make investment. In which company should he invest? Right? There are competing projects or there are competing businesses. Where should he invest? So all these decisions with respect to how to raise money, how to invest in projects, how to ensure that you get a sustainable return, and underlying concept behind all of this is which business will make money in future. Correct? It is not sufficient if it is making money today. TCS today is a $100 billion company. 20 years down the line, will it be? I don't know. And nobody knows. But the goal is to ensure that TCS evolves with time within its competitive space, ensures that it continues to generate money, correct, and continues to maximize profit and give it to Tata Sons, right? So the goal is you have to remember these 6 or 7 aspects, that is basically profit maximization, investment, choosing investments so that sustainable growth, long-term maximization of shareholder wealth, correct? So this broadly, right, this combined with your strategy of which business could potentially make money in future, which is your basic business strategy or corporate strategy, what you call it, all this put together, right, is strategic financial management. Okay, so it encompasses so many things, right? It encompasses your investment decisions, financing decisions, dividend decisions, strategic decisions, and accounting as a discipline is backward looking. It manages or it basically shows you what happened in the past. So if you're writing books of accounts today, you are actually recording what all happened in the past. Whereas financing or any decision with respect to financing of a project is based on future potential benefits from that project. So strategic financial management integrates both what happened in the past, how will this perform, how we should do, and what we should do so that we get sustainable profits in the future, and where should we invest so that we get those sustainable profits in future, and where is the return versus risk ratio higher, that is for a small amount of risk, where will I get higher return, where should I, whether I'm not able to make any allocations or should I return the money to the shareholders, that is dividend decisions, how to manage this portfolio of companies, all of this together is strategic financial management, right? Now, this encompasses broadly your financial policy and corporate strategy. Okay, financial policy and corporate strategy, both are very, very key elements of strategic financial management. So friends, do you think that just finance and strategy alone are sufficient for you to, probably excel or reach your goal of, wealth maximization and sustainable growth and so on and so forth? There is one element that needs to be added to these both your financial management or financial policy and your corporate strategy. They need to be combined or they need to be driven by people. People are an integral part. So you need the right kind of management team or people with the right kind of skills who will actually ensure that there is an implementation of this particular policy or financial policy towards achieving some long-term strategic objectives, and ensuring that they constantly track whether the objectives are met or not and make any changes in direction if any are required. So people is a very, very important element in this. So in fact, our material puts it very, very aptly. Business is equal to strategy plus finance plus management. You need strategy, you need financial skills, and you need management, that is a team who will execute all of this. So all these three are equally essential. Now friends, when we look at this word strategy, right, a lot of people, there are quite a few different meanings, or people tend to, it is a very broad term, right? So you have studied this entire subject called strategic management in CA intermediate, right? Whether you are in IPCC or CA inter, the subject was there, strategic management. You would have studied something there for sure, otherwise you wouldn't have cleared and come to this level, right? But one point that I want to at a very broad level I want to highlight, or I want you guys to remember from what you studied, is strategy is at a very high level and it is long term. You agree? Strategy is at a high level and it is long term. Correct? Tactics are basically short term. Tactics are short term. Operations are for execution. So, strategy is done by high level management, it is for slightly longer term. Tactics are by middle level management, which are done to ensure that immediate objectives are met. Operations are execution of those objectives. So, if you remember this distinction, right, whenever we keep talking the word strategy, please always think that it is long term and it is done by the higher level management. So, friends, if you look at the definition given, strategy may be defined as the long-term direction and scope of an organization, which is what I was telling you, it is long-term, right, and scope of an organization to achieve competitive advantage through configuration of resources. That is, the whole goal is over long term, you should achieve competitive advantage. That is, you should succeed compared to your peers or your other competitors in the same space through configuration of resources within a changing environment. That is, by ensuring that you use the resources judiciously, very carefully in a changing environment. In order to do what? For fulfillment of stakeholders' aspirations and expectations. That is, to ensure that whatever your stakeholders want, it can be your shareholders, it can be other people, your consumers, customers, your partners, suppliers, everyone. In order to ensure that you fulfill all your stakeholders' aspirations and expectations. The second part of this is, it is stakeholders, though it encompasses all these above players. We are specifically focusing on investors maximizing their wealth by choosing multiple investment options, right? They also have multiple opportunities or multiple options on how they can, whether they can invest or not invest, they can withdraw, whatever they wish to do with their money, they can do. And they will make those decisions based on the favorable risk reward ratio. That is, wherever do I get for minimal risk, maximum reward, that is what I will do, right? So, they also have a portfolio choice. So, when you think of strategy with respect to SFM, I want you to remember these terms: long-term direction, to achieve competitive advantage using limited resources in a dynamic environment for maximization of stakeholder expectations or shareholder wealth, and these shareholders have multiple opportunities to make investments and they will make their investments where the risk return trade-off is the best for them. Okay, I want you to remember this aspect. Now we will discuss this aspect in slightly better detail by taking an example. So friends, all of us are aware of Amazon. Some of us buy, some of us may use Flipkart, whatever it is, but we are all aware of Amazon, correct? Amazon website where we buy everything from electronics to clothes to books to whatever, right? Now, this company was started in early 90s, by this gentleman named Jeff Bezos. He was actually a hedge fund manager. He left that and started this company. At that point of time, when he started, in the initial few days, they were shipping books and all of that stuff. And after they started shipping books and building slowly a big business, at some point, Mr. Jeff Bezos thought that, he believed that he had a long vision. He had a very long vision of how the internet would evolve or what he could do with this, in this internet economy, e-commerce. He had a very long vision, which is why today he is one of the wealthiest persons on the planet, because he executed that vision also. But what was that vision? The vision was he wanted to become a big e-commerce player, or rather the biggest e-commerce player. At that time, Walmart was very big. He still built Walmart also, correct? But if you look at the way he went about it, it is a perfect, if you ask me, perfect example of corporate strategy linked with financial decisions. Brilliant use of corporate strategy or brilliant mixing of corporate strategy and financial decisions. What do I mean by that? And of course, management also. He himself is the manager, right? And he built a team of managers around him. So, Amazon culture, some people say is very tough, but at the senior management levels, they say that it brings out the best in you. So, it is, people who have worked in Amazon probably may know it better. But, great strategy, great financial acumen and good set of people. These three together built a great business. So, what he did, initially when he believed that, there is this great idea that I have and I have already executed to a certain extent, and I believe that I can make it much, much bigger, I can be present across the globe and all of that. So when he believed that, he is going to build this great company and, he's going to have organization across the world, he's going to deliver goods across the world, he's going to not only be in books, but a lot more other things. What he did was, he actually went and raised money from investors. He listed his shares. Okay, so he listed Amazon on stock exchange, NYSE. And when he raised the money, with that money, he went on investing in building a large company. See, a lot of people actually take money from IPO. A lot of IPOs are failures, some of them are success. In his case, he was able to consistently convince the investors, that is whoever has invested money in him, it could be retail investors, it could be large players, all of them saying, boss, I am thinking of this big vision and I am executing it on that vision. I will not be making great money in the first 5 years, 10 years, and he was insistent, he was absolutely clear that I will not make money. And he said, I am going to achieve certain things with this money, whatever you have given me in the IPO, I am going to do certain things. In the first few years, I will not at all make money. My free cash flow is going to be negative. But I will build a business that will have a long-term competitive advantage, which will be very difficult to beat. He managed to convince. So he raised the money by equity. What is equity? Equity is the highest form of risk funding, right? And the people who are investing in equities are already aware that, it may succeed, it may not succeed. But he constantly convinced the stock markets that he had a great plan, great vision, and he executed on that vision. One more person who did this is Elon Musk in Tesla. He also said, I am going to build a company, right, of which manufactures electric cars. First, I will manufacture a super sports car which is very expensive. Then I will modify it to a certain extent and bring down the price. Then I will do something and bring down the price. He actually laid out steps and he did an IPO and took the money from the market and he delivered on those steps, right? So their financial acumen was very clear. I am going to raise equity money, that is risk capital, and I have a strategy and a vision. I will execute on that vision, and I am a good manager, and I will have a team of people who can manage it well. And he led everyone to believe that, and they actually executed. So now Tesla is also a huge market cap company, hundreds of billions of dollars. Same thing with Amazon also. It's also crossed $1 trillion market cap, right? So these people have used strategic. When I say strategic, corporate strategy, financial, when I say financial, they've used their, whatever money they've raised, they raised it well and they used it well, judiciously. Management, that is, they have executed everything well. That is, the team ensured that the corporate strategy was executed from the money that was raised. These two are perfect examples for us to understand how strategic financial management can be done well. So if you look at what these two, Amazon or Tesla, have done, they have done SSMCA. Okay, so this is a acronym or a mnemonic which I'll use to explain what they have done. They basically have searched for best possible opportunity. They've searched, they've scanned what all they can do, what is it that gives them happiness, what is it that they think is the best opportunity, what is it that they want to do. So they went and searched. So they evaluated multiple opportunities and then they chose one. They selected the best one which has maximum return or best possible profitable opportunities. S is search. SSMCA. So S is search for opportunities. Second S is select the best or most profitable opportunity which will give you long-term sustainable growth. Then mix is optimal mix of funds. That is, you choose the right kind of funds. Both these guys chose equity because debt would come with the risk of repayments. Immediate, for 2 years, 3 years you have to repay, and if you are not generating free cash flows, how will you repay? Both in the early days of Amazon or early days of Tesla, it was very difficult to repay, right? Because they were still in the product building phase. In their case, it was equity. Probably if it is a power project, the best probable mix of funds is large amount of debt and small amount of equity, because power project probably has a 25-year contract. Okay, when you have a 25-year contract, there is certain cash flows. So when there are certain cash flows, probably the better mix is equity and debt. So these guys chose equity. In some other case, it may be debt. The proper execution of a corporate strategy with the financial acumen would encompass SSM, that is, search for opportunities, select the best opportunity which gives you maximum profit, M, which is mix, that is using the right or optimal mix of funds, then C is use the internal controls. C stands for controls. Use right measures of internal controls to ensure that whatever you thought is going in the right way or there are any deviations. Okay. A is analyze. Analyze those deviations and take corrective actions. Okay. C is for controls, that is internal. Put up a system of internal controls to check how things are being executed. Then analyze the results. Okay, analyze the results of what you have done, and if required, do a course correction or make changes or evaluate whether your strategy is doing well. If not doing well, what should be done, right? So SSMCA broadly covers what are the functions of strategic financial management, or broadly how do you execute a good corporate strategy with financial acumen, right? So that is these 5 are broadly the components of that. Just to give you one example, again going back to Amazon, how beautifully they executed these all 5 steps can be figured out from that. So first step, they searched for opportunities and then they figured that e-commerce is the best opportunity. They selected it. They believed that it has maximum best possible returns. Okay, they did that. Then they mix of funds, that is they chose the equity as the mix of funds. Then internal controls to see everything is going fine or not. So Amazon has very good system of pickup, drop, they have a good system of delivery, they have Prime, so faster delivery, all of that, they evolved all of that over a period of time. Analyze, so they checked whether things were working or not. If they were not working, what should we do? If something was not going in the right direction, they made changes. So just to give an example, the biggest cash driver in Amazon today is not their e-commerce business. It is AWS, Amazon Web Services, where they host data in cloud. They used to initially host all their data in some third-party server. Then they figured, why should we do all of that? Why don't we build the cloud on our own? They built it, and then they realized they could lease that cloud space also. So they started leasing it. Today, that generates a significant portion of cash flow for Amazon. Even though they started with e-commerce, even though they are very big in e-commerce, AWS is their primary cash driver. This is a perfect example of analyze and take corrective action, right? So these are the 5 components of perfectly or well executed, or you can say the functions of strategic financial management. So friends, what are the key decisions that one has to make when you're implementing a financial strategy? What are those key financing decisions, or financial decisions rather, key financial decisions? Okay, if you remember in financial management, we discussed that there is financing decision, investment decision and dividend decision. What is financing decision? That is how to raise the money, how to finance, whether it is equity or debt or mix of those two or preference shares, or how do we raise money. Second is investment decisions. Where do we invest? Which project is giving us the best kind of return? Where is the risk return matrix better in our favor? That is, for lowest amount of risk, where are we getting highest amount of return? Then dividend decisions, that is it better to keep the returns with us or give them to the shareholder? That is, when I say us, it is the company, whether the company should retain the returns or company should distribute the returns as dividends, whether the dividend distribution is the best possible use. Okay. Fourth important thing that we are going to study in this particular subject SFM is portfolio decision, that is portfolio allocation decisions. You don't look at a specific single aspect in isolation. That is, you don't make investments in one particular business or one particular segment in isolation. You look at it from an overall portfolio perspective. The perfect example, if you ask me, for understanding how financial decisions are made is Reliance Industries Limited, right? So some of you may be aware, some of you may not be aware, some of you may have seen on the movie also called Guru, right? If you see the movie, please look at it from a CA angle. This person who was in Yemen came back and he started, I think he was running some petrol bunks. He came back, he started a business, and initially it was in polyester yarn. And Reliance came out for IPO sometime in 80s, right? So with that IPO money, they built a huge polyester yarn factory, and he used to give basically Vimal clothes to all the government babus. Okay, that is what they are shown in the movie. I don't know how true it is, but he used to give those Vimal suitings and shirtings. They had a brand called Vimal. So their clothes, he used to actually give them as gifts to government babus, bureaucrats. From polyester yarn, they actually evolved into petrochemicals. Because one of the key input material for polyester is petrochemicals, petrol basically, or crude oil. In petrochemicals, they built a refinery. So if you go to Gujarat, you will see there huge Jamnagar, they have a huge refinery. Okay, in fact, I think it is the world's largest refining complex. They refine crude there and they re-export it. Whatever it refines, it imports, refines and then re-exports. Slowly from there, they moved into other businesses because they realized that, this business, there is more value to be unlocked in this business by going further upstream. They started with cloths. From cloths, they went into the raw material, which is polyester. Polyester, they went into even more basic raw material for that, which is crude. From crude, they went into crude exploration also. So Reliance actually has, applied, and they got some oil wells and gas wells in KG basin, gas wells primarily. Krishna Godavari basin, they had some gas wells. They were actually generating a lot of gas. I think even some gas is coming even now also, but it is reduced substantially. But they had a strategy to actually go into a different business altogether. They had a strategy to go into upstream businesses, one after the other. Now, this is where it gets even more interesting. Okay, for a moment, ignore the fact that they also had finance, then, Anil Ambani, Mukesh Ambani split, and, Mr. Anil Ambani took away all this power company, telecom company, and all of that stuff. Okay, so for those of you who are not aware, Reliance Jio is a new company. Before Reliance Jio, Ambani's or the Reliance group has already launched Reliance Telecom, one particular telecommunications business. In early 2000s, they launched. It failed. Okay. Then Mr. Anil Ambani took it over. That also is now it is no longer functioning. Reliance Jio is the third avatar. Reliance Jio is the third avatar of mobile telephony for Reliance Group. So they moved into Reliance Jio. Now, very few of us remember that Vimal's shirtings and shootings. So now, very few of us know or remember anything about that Vimal shirts or suits. If you ask your parents or your grandparents, they all will know Vimal. We don't know, right? We all know that they have a crude refinery complex, and we know that, some of us know probably the KG basin. But current generation, today's people know Reliance more by Jio. If you just wait for few more years, people will tag Reliance with not Jio phone, but Reliance, they have the Jio, TV, the Reliance has Jio, they are building a marketplace. So Reliance has continuously evolved from being a shirting company to a polyester yarn to a crude refining to a gas exploration to Reliance Jio telephony to Reliance now TV and Reliance Internet, Reliance broadband. So the organization has evolved, and they also have other divisions. Reliance Retail is there, Reliance Digital is there, agreed, they all are there. But the group has morphed. Morphing means changed, right? The group has morphed its overall portfolio slowly over a period of time. Even today, petrochemicals contributes a very significant portion of profits, but they have morphed their entire outlook. Why have they morphed? So they believed that initially oil was the king. Slowly they believed that no, data is the king, data is the new oil. So they changed with times. Now when they changed with times, all of this is strategy. Where did financing come in? Finance came in when they had to make investments. So my dear friends, when they had to make investments, petrochemical division was giving a lot of money. That money, they could have taken dividends also, but they chose instead to invest in Reliance Jio. Reliance Jio in 2012, 13, 14, 15, they launched I think in 2015 or 16. Before they launched, for 4 years, 5 years, they laid out extensive network of fibers, cables. They laid out extensive, built huge network, towers, everything. They had that courage and vision to make that investment, right? So it is not just the strategy. You should also have money to invest. They got that money from petrochemicals division and they executed it well. That is the management. That is what I am saying. SFM. They had a strategy, they had the financing, and they had the management to execute it, right? So they did this superbly, and they ensured that today, they are the biggest player in telecom. And everybody is scared of Reliance Jio. I mean, internet tariffs have dropped, your Bharti Airtel is in losses, Vodafone Idea is almost in the verge of shutting down. So they have basically captured the entire market. Whether they are making money or very, very marginal money is a different thing. Because they believe that in long term, they will make money, right? Because they will have a competitive advantage because no competitor is left. BSNL anyway is in a bad shape. BSNL is anyway in a bad shape. Airtel is making losses, and so some quarters they make profit, some quarters they make losses. Vodafone Idea is completely gone, but Reliance Jio is able to survive. right? So they managed this whole entire financing plus strategy came together extremely well with Reliance, right? So this is one example that I want you guys to basically understand or take it into mind when I talk about these 4 financial decisions. First one is financing. How did they do the financing for the Reliance Jio? They took debt also, but they took a lot of their equity money from, or the money internally generated from their petrochemical business. Investment decision, they took a decision to invest. Then dividend decision, they decided that only some dividend they will pay, rest dividend they will reinvest. And then portfolio, they built a portfolio. They basically, you should never look at Reliance Jio independently as one entity. So you should never look at Reliance Jio's telecommunications business independently. Telecommunications business was started, it got them a foothold. They are using that as leverage to enter into Reliance Broadband, Reliance TV, Reliance Marketplace. Some of you may be aware, may not be aware, in year 2020, when the COVID was induced, lockdown was there everywhere, Reliance Jio went and raised few tens of billions of dollars from Facebook, Google, they raised from everybody, large PE firms. They raised few tens of billions of dollars for Reliance Jio Marketplace. Okay, even in such a kind of a time, they were able to do that. How did they do it? Because they were able to actually tell the rest of the, whatever the investor community was there, they were actually able to tell them that we have this business, we are please don't look at Reliance Jio Telephone as an independent, isolated item. Look at the entire portfolio. Once we have a foothold in customers' mind share, slowly we will launch the Reliance Jio Broadband, we will launch Reliance TV, we will launch a Reliance Marketplace, then we will use our Reliance retail stores to service all of these. We have Reliance Fresher supermarket. So they are basically trying to compete against Amazon. Amazon also does the same thing, right? Now Amazon not only delivers your electronic items, they deliver groceries. Now they are venturing into food delivery. They have Amazon Pay. Right, they have Prime Video where they are into movies. They are basically trying to capture the customer mindshare wherever customer is spending more money. Reliance also is trying to do something very similar, and they have done this beautifully by saying that please don't look at one particular business in isolation, look at the entire portfolio.